we've had the strongest foundation that we've ever had, and that can really support this growth.
So Josh, Ares recently provided guidance for the first time. So why did the company decide to provide guidance now?
Ares decided to provide guidance to now due to the fact that I think we are very confident in our system that we've built. And, if you ever spent any time with myself or Vitaliy or Grant, you will hear us talk about this idea of putting a dollar and getting, so many dollars out. We've been demonstrating that now for really since I started. And I don't remember exactly when that was, over 3 years ago. And we've really built this system that is repeatable. And we have a high level of confidence in this system, this growth model, this growth engine, as I often refer to it as. And we've demonstrated it now for multiple years. Historically, I've always wanted to, if you've sat with me, I've told you that we'll do this. And I've told you that we would grow at this rate. What has held us back is getting the rest of the company in a space that can actually support this rapid growth and have the foundation to not break. And I think we're at a place now coming out of 2024 where we really did tighten things up. We've had the strongest foundation that we've ever had, and that can really support this growth. So demonstrating our ability to grow, now doing so on top of that firm and strong foundation, this is just really the first time I feel like all those pieces have come together, and we have a really clear path to that future. So the guidance really is really just mirroring what we've been saying. We're just now saying it louder.
I'd like to add a little bit to this, Josh. I think a big part of what we're trying to do here as a public company is, we have obviously fiduciary duty to our investors and shareholders to kind of shed some light onto the strategy of what are we doing, where are we going with these revenue growth and EBITDA numbers. And I think if you look at the past history over the past 3 years, we've been nearly doubling revenue every single year. Now, this is not accidental, like you mentioned. This is a system. This is a growth engine that you've built back in your earlier career days, and you've perfected it. And here we're implementing it with Ares, and we've shown it over the past 3 years. And a lot of the shareholders that I have communication with, they believe in the long-term opportunity behind this company. They see the picture. They see that it's not about, just getting and squeezing the EBITDA out of the company today. It's about having this balance where we maintain this aggressive growth while trying to balance the EBITDA profitability. I mean, any CEO in the world would love to double revenue every year and remain extremely profitable. Now, it's not really necessarily an equation that's easy to achieve. So sometimes you do have to sacrifice. And I think going back to your question, Grant, about why guidance this year is just, I think, a demonstration that all these years haven't been an accident. This has been a strategy. There's been a plan behind it. We just weren't very public about it. This year, we feel more comfortable. We've achieved it already over 3 years. We've seen the EBITDA numbers. We've seen how UFC partnership, how the Timberwolves partnerships, how the Canada basketball, how they shaped up, how they're addressing the key question of ROAS and the proportion of advertising spent to sales. We see how these metrics are trending, and we feel comfortable that even though we're not committing to EBITDA profitability this year, because as I said, it's a delicate balance between growth and profitability, but we feel comfortable that we have a strategy. We know where this is going to go. We know how we're going to get there. And just to top it off, if we think about a little bit of longer term picture, Josh, like you mentioned, you're putting these building blocks today for what's about to happen in a year or 2 years, how to get to this 2 times number. And I think it's important for the investors to also understand that these numbers, to get to this valuation upside that we're talking about, it's important to continue growing. We don't want to slow down the engine. We're getting great numbers. We're dominating the market. There's really practically nobody out there that has the scale, that has the partnership, that has the finances in the EMF protection world. So this market is for us to dominate. And that's where we're thinking about not what's going to happen this year in 2025, but we're thinking, where are we going to be in 2026? Where are we going to be in 2027? And it's our view, and I think it's important for the investors to also understand this view, that if we continue growing in the space and we're able to balance EBITDA and growth until we get to a massive scale, the valuation upside for the long-term investor is going to be so much higher than if we focus today on getting the profitability. I think it's a very important question because obviously the markets are not what they used to be back in the COVID days, so it's a little bit tougher. Having said that, we do have means of financing, like we've announced these couple of partnerships with Clearco, Shopify Capital, and we're actively working on getting the warrants exercised. I believe we have just less than $5 million worth of warrants that are very close to the money. So we have all the pieces in place. We have all the building blocks in place to get us to that 27 to 26, 27 growth rate. And I think it's just very important that we stay clear with the investors and we have these communication channels open.